Hey traders, I am bringing you some macro to micro thoughts for the week that just passed and potentially the week ahead. I am definitely in macro mode as far as backdrop. Looking back at the past month, not once did US stocks finish a day on the lows. There were only like 2 days where the genuine risk aversion took hold. It is remarkable how well equity markets have held up, facing a near-term shutdown in the world's second largest economy, potential market challenges in having this market melt up continue. We definitely have had, panic buying that has come in large part since October in repo, but we're definitely getting extended. We have some SPX well above its 50-day moving average for about 86 days now. Longest streak for since January, since our big drawdown in January 2018. So where to from here? I have been looking at this SPX level of 3,400 or bust for weeks and weeks now, and we came pretty close, 3,385. Let's see what happens next week, as we have always headline risk and actual risk over the weekend. We have some detailed macro research that I have put together for clients that definitely related to the liquidity over coronavirus, as well as higher dollar and the impact, inflation and repo, and we got a whole bunch of growth projections getting nipped by major houses. We've got gold and yields. So there's lots to talk about in regards to the macro picture, and I will do that with clients. What I want to do today is get a review of these IPO calls that have been working extremely well, and also a little bit of a caveat that I see this slowing down. This is not something I'm expecting to advance past, $35, let's say. And then there are lots of individual plays, as you know, that we have been analyzing and trading in my live trading room every day since, November. So I want to go over some of those kind of trading ideas separate from the market. But that IPO rotation, I think, is going to get tired, and we've had incredible success, but it's time, I think, to really take care. So if you go to LeducTrading.com, that is my fishing club membership as well. Live trading room, trade alerts, newsletters. All right, so public blogs under fish stories. You will see that I made available Monday and Tuesday's fishing plans. I do this every day, separate from my intermarket analysis, separate from my macro to micro Gone Fishing newsletter. These are the plans of what I see that is very tradable. And if you have followed my YouTube channel, you will see that I've been very, very focused on IPO plays. So this is where I want to spend a little bit of time and see if that helps frame some thinking of risk reward here, as we definitely tag the upper part of my price target. Okay, so here, for example, was an update that I sent to clients on Friday afternoon, which I will review in some of the high points, if you will, in chart form, so you can see how I am approaching some of these trading ideas and specifically levels. So let's begin. First, it was kind of fun on Friday. We had this amazing move higher in Roku post earnings, and from a weekly, it looked like it was going to head to the top of the wedge. It needed to hold. It did not. It had one heck of a reversal, and in the room, it's kind of funny because I said it's a short to chase if it breaks 145 on the way to 140. So this kind of like 138 area. Well, okay, it hit 127. So clearly, I'm now looking at this area, which is about 125 support. that needs to hold, and then, potentially bounce if this is going to get the buying momentum. Otherwise, I am still and have been a bear on Roku since this weekly gap down. And every weekly bar has been a lower high, lower high, lower high, lower high, lower high until earnings. And clearly, that is a mammoth expansion bar on a daily, and it is quite bearish. So, had the idea that if this was going to close above any of these prior highs, it would be bullish post earnings. It clearly broke pivot intraday, dumped a way under anticipated short in regards to where it actually tapped out. 150-120, seeing the break at 145, and then it's slicing through all levels of support. We'll see how it opens on Tuesday, but this is obviously where I'm looking for some type of consolidation. Otherwise, this is a continuation swing short. Another that was of interest was actually long and then short was Smile Direct. This was doing absolutely nothing wrong on a daily, breaking above the wedge, until I read pre-market and announced in my live trading room before the open that the Better Business Bureau had like 1,800 cases of customer complaints that were released in regards to Smile Direct customers, and it was a very negative read. So at the open, this was take care either, and by the way, prior 15-20 on a weekly needed to get and stay above, or it could turn into this, which in fact is a bearish engulfing candle on a weekly. It turned into obviously a sell the news reaction immediately. And I also underestimated the short on the chase that Friday. I said from 14.50, if we break, we head down to 13.50, because I'm thinking 21 day, the apex of this wedge. Oh, no, we went right clear through it all the way to basically another $1 lower. So the rate of change in regards to chasing this at the open was quite robust, as was Roku. Both of them overshot my price targets. So those were chases. And by the way, they both are off my list for longs until they can redeem themselves. List was actually a price target short from the other day, and I had 47, basically where it has struggled to stay above. It has been rejected, always at this 47. Trend line got above, looked bullish, ran into earnings, which was bullish, and then obviously gap down on a daily below the 200-day. I really thought this was not enough. It would go down to 47 because this is just such a popular space. It threw up over and down, so obviously it is closing on the lows, and that is just no bueno. However, it is on a trend line, support for a weekly and a 21 week. Again, it looks like a Roku. Gross, just a totally bearish engulfing candle that looks lower, but it's on 2 levels of support. Swing trade long ideas from the IPO list. There are a few that came off, and that would be Peloton. As much as they seem to be excited about this the other day, big range expansion bar, I said I am not bullish at all until it can get above this trend line, because it broke down after earnings, obviously. And I forget what the news was. I was watching it live. It was spiking. I don't care. It couldn't close above. So this is still no bueno, and it looks like a complete rollover. Pins and is also another one that is very disappointing post earnings. It could not hold the gap up. It also couldn't hold the breakout. So this is totally off the list. And then last but not least, I have mentioned NEO repeatedly as a very wild long, as long as it stayed above on a weekly anyway, 3.5. But I tossed it as soon as it broke 4.12 on a daily. It's just not safe. Looks, in fact, like distribution top rollover. It's also China. I think it's going to break 355. So from a trend reversal, great, fabulous, pullback to 10-week. From a daily, it looks like a rollover. It does not look safe. The in-play swing trade longs that are still working, and they are incredibly strong to date, but I think the IPO space of that rotation theme I have been pounding since mid-November, and you've seen some of my videos on YouTube, and for clients, they know, because I just hammer this every single day. What's working? What's working? IPOs. Is this Billy? Incredibly nice rise, shallow pullback. It got a little funky here around the 21 day, but as soon as it broke above, it has been solid. Shallow pullback to the 8-day expansion bar, sideways digestion, consolidation, breakout. It just continues to look really good. Is it wicked extended? Yes. So take care. The volume in options is still pretty good, and they are still buying more calls than puts, but that has been a continuation play. The work 2 weeks ago, loved this Morningstar reversal, said needs to get above 23.25. I think it's going to explode higher. It did, and it continues higher. It is right here into the Keltner and the Bollinger Band. I think it's got to rest. Another one that has not fired, and I said the same time that it looked ready with work, those were my two top actually, has not triggered. So it's stuck here at the 30-week, 63, and a half. The space is getting a little tired, but this is still one that I am bullish. The other are chart patterns as well as cloud plays, not necessarily IPO, that continue to look fabulous. One is AYX, and yes, they had earnings that looked fabulous. Plan, same thing, breaking out, double top, looks great. ZS is one that also was expected to break higher because of this 10 and 21, this trend line. It pulled back shallow, very nice, looks ready. So Crowd and ZS to me are not done, but we're getting into, I think, tired and danger zone. And Zoom was another one, the same exact playbook. Pull back to the 10 and 21, explode higher. Again, these have worked. I think the space is tired. Some others, AVLR, same look. And LK I'm not into anymore with Beyond, but I will mention that they have not busted the 10-week. They are just simply not doing too much. This is potentially running into earnings. I actually thought this would be higher on Friday because it had several layers of support, trend line, 21-day. It hasn't. So if the market does move higher, I do like Beyond, potentially LK, but I'm not crazy about them. And I think the other plays within IPO are going to cool. And I've got lots and lots of intermarket analysis, technical analysis, macro analysis, sentiment, and all those reasons are detailed for clients. Join me.